Hey guys, Tom here from the Investing with Tom YouTube channel. Welcome back to the channel. If you enjoyed today's video, hit like, hit subscribe, and that way you can see future videos as well. So, during the last quarter, Warren Buffett at Berkshire Hathaway bought back over $9 billion in Berkshire Hathaway shares. That is far more than the $3 billion in buybacks that many analysts had expected, and it's the most shares that he's bought back basically in Berkshire Hathaway's history. So there's generally only one reason why Warren Buffett buys shares, and that's because he thinks they are undervalued. So I want to talk through all of that in this video. Now, before we get into that, we do have a sponsor for today's video, and today's sponsor is Hatch. Now, Hatch have been my brokerage platform of choice in order for me to buy shares in the US as a New Zealander. Now, the initial trigger for me to switch across to Hatch was basically because of fees. I was at a bank paying $90 a trade. I can do that exact same trade in Hatch now for $3. They also have far more attractive foreign exchange in my experience than what I've had in the past with the big banks. And they also have a modern, really easy to use platform that is great for the absolute beginner as well. So if you're interested in getting started with Hatch, you will need to go to the link hatch.as/investingwithtom. If you follow that link, create a new account with Hatch, and then deposit 100 New Zealand dollars into that account, you'll get a free $20 top up so that you can get started investing with a little bit more cash. So firstly, just a quick refresher for those that aren't familiar with what a share buyback actually is. Basically, this is the underlying company going out and purchasing its own shares. And this has the effect of essentially returning capital to shareholders by increasing their ownership in the business. So think about it where you have, say, 3 other business partners in some business that you own. So there's 4 of you in total. And the business all up is worth $1 million. So you each have $250,000 in equity. There's 4 of you, so the overall business is worth $1 million. Well, let's say that one of your business partners comes along and says, you know, I really need to get out of this business. I need the cash to go do other things, or I want to do something else, or I'm not liking the business, or whatever it is. And they say that, you know, I will sell my shares to you at $150,000. Now, that looks really, really attractive. So you can buy basically more value than you're paying for. You're getting an additional $250,000 worth of equity to spread over your remaining business partners, but you're only having to pay $150,000 for that. So that situation makes a lot of sense. If that business partner said, actually, I want $400,000 for my shares before I leave, then that doesn't make as much sense. That is actually eroding a lot of the equity that you have in that business. So that's kind of the way that I think about share buybacks. Essentially, after you've gone through the buyback process, you own a larger chunk of the business, and the attractiveness of that buyback really, really depends on the price that you pay relative to the value that you get in. So what's the story coming out of Berkshire Hathaway? Well, basically over the weekend, Berkshire Hathaway released their third quarter earnings for 2020. Now, Berkshire Hathaway released a whole bunch of figures, including their operating earnings, but one of the key things that also came out was this big news about share buybacks. So in terms of the actual performance of the underlying company, I'm reading off an article from CNBC here, which I will leave linked down in the description. Berkshire said its operating earnings came in at $5.478 billion, down more than 30% on the year earlier period. But the company's net earnings, which account for Berkshire's big investments in the public market like Apple, skyrocketed more than 82% on a year-over-year basis to $30.17 billion. Apple, Berkshire Hathaway's biggest stock holding, rallied more than 26% in the quarter. Coca-Cola gained 10.5% over that time period, though Buffett has cautioned investors not to pay attention to those net earnings because the investing gains are unrealized and volatile. So just to reiterate on that one, so if you ever are doing an analysis on Berkshire Hathaway, it pays to basically not even look at the net earnings of the company. A couple of years ago, there was a change in accounting rules, which basically said that Berkshire Hathaway now has to include changes in their public holdings and their stocks as earnings. So basically, if the stock market goes up, Berkshire's earnings will look unbelievably good, and if Berkshire's stocks go down, then their earnings will look unbelievably bad. So you're far better off focusing on the operating income from the business, which is that $5.478 billion number, which is down more than 30% from last year. And the article goes on to basically speculate on whether Warren Buffett thinks Berkshire Hathaway shares are cheap, or, why is he buying back these shares? And basically for many, many years, Buffett has given us this very clear message on how he thinks about share buybacks. Basically, he will repurchase shares in Berkshire Hathaway if he thinks that after going through that activity and buying back the shares, that the remaining shareholders are instantly wealthier. He will only repurchase those shares if he thinks he's getting a good deal, if he thinks he can buy those shares below intrinsic value, and he's basically not willing to part with $1, which he knows is worth $1 because that's literally what it is. He's got it sitting there in cash. He's not willing to part with $1 in order to buy something that might be worth in and around $1, or maybe a little bit more than $1. He's only going to part with that cash if he knows that he is purchasing something worth substantially more than the dollar that he outlays. So that to me suggests that Berkshire, in Warren Buffett's opinion, is undervalued, and it's more attractive than many of the other opportunities that he sees out there. And one of the other metrics that Buffett has used in the past is this price to book value metric with Berkshire Hathaway, basically saying that he thinks about 1.2 to 1.3 times book value is a reasonable proxy for intrinsic value for Berkshire Hathaway. He's tried to get away from that over the past few years, basically saying that Berkshire has a growing number of operating businesses that are worth a whole lot more than that book value multiple. So potentially that 1.2 to 1.3 is a little bit more like a floor kind of valuation, and it's potentially actually worth quite a bit more than that if you were to do sort of a discounted cash flow type approach. Now, if we look at that metric and how it's kind of tracked throughout 2020, as of filming this video, it's about 1.27 times book value is where Berkshire Hathaway is currently trading, so it is right below that sort of 1.3 times book threshold, and it's traded much lower than that right throughout the year. During the earlier sort of crash in March, it actually got even below 1 times book value for a short period of time, and the B shares have traded right down into the $150, $160 range, and just this morning they're trading at about $225. So even though the price has moved around quite a bit, Buffett still seems positive that this is a really good opportunity relative to the other investments that he has available. Now, anytime you're talking in extremely large numbers like $9 billion in share buybacks, I think it pays to put those numbers into context to give you a feel for just how aggressively Warren Buffett has been buying these shares back into Berkshire. So I've put together some numbers here, and I'll put these up on the screen here. I've just done some quick numbers in Excel where basically I look at the average trading volume for both Berkshire Hathaway Class A and Class B shares. So for those who don't know, Berkshire has these Class A shares, which are the original shares that trade north of $300,000 US. They also have the B shares, which are basically just the A shares cut into even smaller slices, and they trade for about $220 a share right now. So he's been buying both the Class A and the Class B shares, and if you look at the average trading volume over the past 3 months, then you will see that during that period of time, the average trading volume each day for Berkshire's Class A shares is only about 360 shares. That's a fairly thinly traded kind of stock, and the per share price is so high that that is actually still quite a few dollars being traded each day, but not a huge number of shares. And the Berkshire B shares have traded a little under 5 million shares per day, and that's sort of a 3-month average. So if we assume that there were about 60 trading days over the past few months, which they may have actually been slightly less than that, but that's going to be roughly about right. And if we assume an average price over the past 3 months of say $310,000 for the Class A and $210 for the Class B, that basically gives us the total amount that has been traded over that period. So that comes out at right around $70 billion, a little under $70 billion traded over the past 3 months from Berkshire. And Warren Buffett has been responsible for buying about $9.2 billion of that 69 or 70 billion. So that comes out, if we look at it in total dollars, of about 13% of all of the volume that is traded in the past 3 months has actually been getting purchased in by Berkshire Hathaway itself. Now, largely that has come through Class B shares. They've bought about 11% of all the volume of the Class B shares that's traded over the past 3 months, but they've bought a massive 37% of all of the Class A volume that has traded as well. So pretty interesting. I think that allows us to get a good handle on just how aggressive Buffett has been buying. There is a limit to how much money he can deploy in share buybacks. If he's too aggressive, he'll simply push the price up really fast. And although Warren Buffett isn't like a short-term trader or anything, he does have to keep these kind of trading things in mind so that he doesn't push the price unnecessarily high or doesn't do anything to disadvantage these share buybacks. And I've heard him mention that when he's bought into companies in the past, not Berkshire Hathaway, but say Apple, for example, he's bought as much as 1/3 of the daily trading volume. I believe that's about what he was buying when he was purchasing into Coca-Cola stock back in the 80s. And in the words of himself and Charlie, that was about as aggressive as you could possibly buy it without having too much of an impact on the price. So to see Buffett buying about 13% of the trading volume, it's nowhere near the 1/3 that they were doing with Coke, but it is still relatively aggressive in my opinion. Now, these share buybacks are actually something that many Berkshire Hathaway shareholders have been waiting for a long time. For many years now, it has been a huge story. Every time that Buffett comes out with a quarterly update or an annual report, people love to jump to one particular statistic, and that basically is looking at Berkshire Hathaway's cash position. And over the past several years and quarters, we've seen this cash position just skyrocket. Berkshire and the underlying businesses within Berkshire Hathaway are just absolute money printing machines, and Buffett has been struggling to find opportunities to make new investments and put a lot of that money to work. So naturally, as the business produces cash and as Buffett isn't deploying all that much of it, we've seen this cash position build up and build up and build up to the point now where it's in the $140 billion range, even after spending all this money on buybacks just in the last quarter. So a lot of shareholders have really been, just basically watching this cash sit there over the past few years and have been sort of waiting for Buffett to do something with it. He talks about this himself actually as kind of the institutional imperative, people giving you their money to invest and, watching you basically do nothing and then telling you to swing at something, do something with my money. And I think Buffett's been in that position a little bit. He is super rational. He owns a big chunk of the business himself and he's not going to put money to work where it doesn't make sense. But now that he has got this opportunity to buy back shares at what he, I believe, thinks is a reasonable valuation in Berkshire, he's starting to put some of that cash to work. So the basic options, if shareholders do want some cash returned to them, if Buffett just can't use it, are either a dividend or a share buyback. Buffett has always favored the share buyback over the dividend. Basically, many of the shareholders have favored that as well. They sort of think of Berkshire Hathaway as almost like the savings account for them. They consistently buy Berkshire shares over time, and they basically let Buffett just compound it away and kind of grow that wealth. So if they were to get paid a dividend, they'd probably just put it into buying more Berkshire shares anyway, many of them. So Buffett is going and just buying back the shares himself when he thinks they're at an attractive valuation. And that strategy of buying back himself actually has some tax benefits versus a dividend payment as well. So if you were to pay a dividend to your shareholders, they would have to pay income tax on that, and then they'd actually have less money to put to work in terms of buying the shares. So it makes a lot of sense for Berkshire to do this. I think it's something they will continue to do over a long period of time. You may see the buyback slow down if the market drops a lot and they all of a sudden have these other opportunities to deploy that cash into other businesses. But the longer that Berkshire Hathaway just keeps chugging along and the stock not really going anywhere, and the cheaper that kind of price to book metric is getting, and really the price to intrinsic value is getting, I think the more that we can expect to see Buffett put cash to work in retiring shares and increasing the ownership in the business for existing shareholders. So it's going to be really interesting to see what Buffett does over the next few quarters in terms of whether he continues to buy back shares and how aggressively he continues to do it, whether he keeps chugging in 10 to 15% of the daily volume every day, or whether he dials it back or is even maybe a bit more aggressive. It's going to be an interesting one to watch, and I will be watching it like a hawk because I'm super interested in Berkshire Hathaway and pretty much everything they do. So that is all from me today. I do hope you enjoyed the video. If you're interested in the Hatch offer, you will need to head to the link hatch.as/investingwithtom. It'll be linked down in the description below, so feel free to check that one out. But that's all from me today, and I will see you in the next one. Cheers.